Hi everyone, I'm Yusuf Topal. In this video, I'll share the top 10 strategies to help you build a strong foundation for your investment journey. Whether you're investing in the stock market or buying real estate, these strategies will help you reach your financial goals. Remember, investing isn't a get-rich-quick scheme. It's a long-term game, and success requires patience, discipline, and smart decision-making. Ready? Let's get started. Before you go on a trip, you need to know where you're going, right? Investing is just like that. You might be saving for retirement, buying a house, or just trying to get out of debt. Whatever your goals are, it's really important to identify them and write them down. This will give you something specific to focus on and stay motivated. It will also help you figure out the right investment strategies for you. For example, if you want to retire in 30 years, you'll need to focus on long-term growth. After you've set your goals, we can move on to the next step, budgeting and cash flow management. Okay, so you've set your financial goals. Now it's time to make a plan to reach them. This is where budgeting and cash flow management come in. Creating a budget is essential for tracking where your money goes and keeping your spending under control. You need to know exactly how much you earn and how much you spend each month. This includes keeping track of all your expenses like rent, bills, groceries, and entertainment. Luckily, there are tons of apps and websites to make this easier. Some of my favorites are Mint, Personal Capital, and YNAB. After you create a budget, focus on building an emergency fund. Now let's get to the fun part, investing. But hold on a second. Before you start putting your money into random companies, you need to learn a little about fundamental and technical analysis. Fundamental analysis involves looking at a company's financial performance to figure out if it's worth more or less than what it's currently trading for. Technical analysis, on the other hand, tries to predict future price movements by looking at a stock's past price action. Both approaches can be complicated, but understanding the basics can help you make smarter investment choices. Remember, knowledge is power, and this is especially true when it comes to investing. In the world of investing, there's a saying, "Don't put all your eggs in one basket." This talks about how important it is to spread your investments around. We call this diversification. Diversification means putting your money into different types of investments to lower your risk. These types of investments are called asset classes. Asset classes are big categories like stocks, bonds, and real estate. They also include things like commodities, which are raw materials like oil or gold. By spreading your investments across different asset classes, you protect yourself. If one investment does poorly, it won't ruin all your savings. There are lots of ways to diversify, but one common way is to invest in companies in different industries and from all over the world. Investing is a marathon, not a sprint. Successful investors are those who think long-term and don't get caught up in short-term market swings. Remember, the stock market will always go up and down. The important thing is to focus on your long-term goals and not panic when the market drops. Market downturns can be a great opportunity to buy stocks at a lower price. Staying calm and continuing to invest when the market is down requires discipline and emotional control. In the long run, patience and discipline will be rewarded. The world of investing is always changing. New products, trends, and risks are always popping up. So if you want to be a successful investor, it's really important to keep learning and stay up to date on the market. You can learn about the market, different investing strategies, and financial planning through books, articles, websites, and podcasts. You can also stay current by following financial news and listening to industry experts. Make sure you're getting your information from trustworthy and unbiased sources. Psychological preparedness, manage your emotions. Investing isn't just about numbers, it's also about psychology and managing your feelings. When you invest, you'll experience a range of emotions like fear, greed, and panic. If you let these emotions control your investment decisions, you can make costly mistakes. When the market goes down, you might get scared and sell all your stocks at a loss. Or when the market goes up, you might get greedy and take on too much risk. In either case, if you let your emotions cloud your judgment, you could lose money. That's why it's so important to keep your emotions in check when you're investing. Section 8. Mentors and advisors. Learn from experience. You are not alone on your investment journey. There are many people around you who can guide and support you. One of these are financial advisors. Financial advisors are professionals who offer personalized financial planning and investment management services to help you reach your financial goals. However, not all financial advisors are created equal. It is important to choose the right advisor for you. Look for an advisor who is experienced, trustworthy, and puts your interests first. Part 9. Using technology. Make investing easier. Technology has made investing easier and more accessible than ever before. Now there are tons of apps, websites, and tools you can use to invest, manage your portfolio, and keep track of your financial information. These tools offer a variety of features to help you reach your investment goals. It's important to choose tools that are trustworthy, safe, and fit your needs. Remember that these are just tools, and they can't make your investment decisions for you. Chapter 10. Patience and discipline, the key to success. And finally, two of the most important qualities of a successful investor: patience and discipline. Investing is not a get-rich-quick scheme. It's a long-term game, and it takes patience, discipline, and hard work to succeed. If you panic or make hasty decisions in response to short-term fluctuations, you could lose money in the long run. If you are patient and disciplined, you can achieve your financial goals in the long run. There you have it, the top 10 strategies for beginner investors. I hope this video has given you the knowledge and confidence you need to start your investing journey. Remember, investing is for everyone, and the earlier you start, the better. Subscribe to my channel for more tips and strategies, and I'll see you in the next video. Don't forget to subscribe.